Okay. Perfect.
Yeah,
So
okay, sir.
thanks, Moses. So before I start our today's question practice session, quickly, I want to share something important, I would say, which is about the time limit and election dates. So in ATX or BTX, majority of the theory portion is like you have calculated the tax. What's the time limit? What's the timeline to submit the tax? What's the timeline to pay the tax? These type of questions. So on this front, which is like we have calculated, or even at times we talk about, let's suppose with respect to capital gains, this relief has to be claimed, this relief has to be claimed. For example, BADR has to be claimed, for example, investor relief has to be claimed, etc., etc. So you don't have unlimited time from the tax perspective to do all that. Always, there is a very limited time to execute all of these things. Okay. So if you have limited time, then what's basically the time limit you have to execute these type of things? So that's basically the point of discussion over here, which we will be talking about in time limits and election dates. Okay. The first area or the first section is about income tax. Okay. In the income tax, let's first talk about the election or claim. The first column talks about which thing we are talking about. Time limit talks about what's the standard time limit. And third thing is for finance, sorry, for fiscal year 25-26, what is the time limit? So if I talk about the first line, so the first line is agree the amount of trading loss to carry forward. So if you have used any loss in current year or carry back or carry forward, and you are like, this is the rest of the amount I am carrying forward. So what is the time limit to agree on the amount? What is the amount of loss which you are going to carry forward? That is 4 years from end of tax year in which loss arose. So just imagine if the loss arose in fiscal year 25-26, then the time limit is 5th April 2030. So 4 years from end of tax year. Second, current prior year set off of trading loss against total income and chargeable gains. What is the thing being referred over here? So basically we are referring over here the current year and or carryback claim, right? What's the time limit to claim the current year and or carry back? So it's 12 months from 31st January following the end of tax year in which loss arose. And if the loss arose in 25-26, then it's basically 31st January 2028. Okay. 3 years carryback of trading loss in opening years, abbreviated as opening year loss relief. What's the time limit to claim the opening year loss relief? It's 12 months from 31st January following the end of tax year in which loss arose. So just to, I would say, make it convenient for you guys to memorize, exactly same. So current year, prior year, opening year loss relief, for both the things, the dates are same. This is an easy way to remember this. Otherwise, if you ask me, this is one of the most difficult thing to memorize. Then 3 year carryback of terminal trading loss in the closing year. Terminal trading loss in the closing year. In easy words, it is opening year loss relief, right? What's the due date? 4 years from the end of the last tax year of trading, 5th April 2030. Any quick suggestion to keep it remember for what are the common factors between, let's say, this color and versus, let's say, the yellow color?
Law has to do with the 4 years, while the yellow has to do with 1 year.
So yellows are with 12 months from 31st January, and in fact, set off of the set off loss on the disposal of unquoted company shares against income. So if any such type of loss, what's the due date? It's 12 months from 31st January. So if you notice from my side, if anything has to be adjusted against income, or I would use the word total income, then the time limit is 31st January. And if you notice, if anything has to be adjusted with trading income, the time limit is 4 years. So carry forward of loss. Where do we adjust the carry forward of loss? Against trading income. Terminal loss relief. Fourth one. Where do we adjust terminal loss? Against trade. And we are talking about individual. So trading income, 4 years time limit. And where the income is adjusted against total income, like current year total income, carry back total income, opening year loss relief total income. So all these things are against, uh, sorry, 12 months from 31st January after fiscal year, which is like 31st January 28. Uh, then next line, transfer of assets eligible for capital allowance between connected parties, national insurance contribution, class 1 primary, secondary, pay days. So pay days means what's the time limit to pay? 17 days from the end of each tax month under pay system, and 14 days if not paid electronically. And for 25-26, it's basically 22nd of each month. Class 1A NIC, the payday is 22nd July following the end of tax year, and 19 July if not paid electronically. So if you look, it is each month. It is each month, and it is once in a year. So one ANIC is paid once in a year by the employer, whereas class 1 primary means class 1 employee NIC, secondary means class 1 employer NIC. That has to be paid. That has to be paid every year. Sorry, every month, not every year. Every month. Class 4 NIC. So class 4 NIC, we are very clear that class 4 NIC is to be paid along with the self-assessment. So what's the self-assessment? First installment, second installment, balancing payment, and which we are going to cover shortly as well. Second discussion is around capital gains election claim, time limit, and for 25-26. Replacement of business asset relief for individuals. So business asset relief for individuals. So effectively, we are talking about rollover relief. So what is the time limit for rollover relief? It's, to be precise, 4 years from the end of tax year in which the disposal occurred or the replacement asset is acquired, whichever is later. So whichever, like, if asset disposal date is later and reinvestment is already done, then the 4 years would be counted from the disposal date. If the funds are replaced after disposal of asset, then asset acquisition date is later off, then 4 years from that date. So for 25-26, so let's say whatever is later off, the date is in the fiscal year 25-26. So then the due date would be 5th April 2020 for 2025-26 sale or acquisition, whatever is the later event. Holdover of gain on the gift of business assets. So we are talking about basically gift holdover relief. So gift holdover relief, what's the due date for gift holdover relief? 4 years from end of tax year in which disposal occurred. And for 25-26, it's 5th April 2030. Then, then this application of incorporation relief. There is a very interesting, one very interesting thing. On the heading, it is election or claim. And here we are talking about this application. What does it mean, this application? So, why it is the word disapplication over here. So if you notice, disapplication is not with rollover, disapplication is not with holdover, disapplication is not with EIS, disapplication is not with BADR or investor relief, it's not with determination. Why disapplication over here? Because if you recall, incorporation relief is automatic. And automatic reliefs means you will get it automatic. So if you don't want this relief, then you have to disapply it. Okay, so that's why we are using the word disapply over here. Well, coming back to the point. So, read into this document very carefully. That's very interesting. So if you want to disapply, then what's the due date to disapply the incorporation? So if you recall, since we are discussing, just to join the dots, out of all of the reliefs in capital gains, what were the automatic reliefs? So one, incorporation relief was automatic. Second, paper for paper exchange was automatic. Third, second paper for paper exchange was automatic. Third, principal private residence was automatic. Okay, so a quick refresher on that as well. So this application of incorporation relief 2 years from 31st January following the end of tax year in which this business is transferred. So which is like 31st January 29 if incorporation takes place in fiscal year 25-26. If sell all share by 5th April following tax year of incorporation, time limit is 12 months earlier than the normal due date. So which is like 31st January 2028. I really do not advise to remember the second point. My advice is to keep focus on this one line. This one and this one. Because if you go into such nitty-gritties, they are a lot. And if you try to grab these type of nitty-gritties, maybe you will lose your main core areas or focus areas. Okay. EIS reinvestment relief. So EIS reinvestment relief was discussed as part of tax efficient investments. What's the time limit for reinvestment? 5 years from 31st January following the end of tax year in which disposal occurred. So the time limit is 31st January 2032. Business asset disposal relief and investor relief, 12 months from 31st January following the end of tax year in which disposal occurred, 31st January 28. Determination of PPR. So determination of PPR is basically, for example, if you, so for example, if you have already a PPR, you purchased another property and you want to nominate your another property as PPR, then what's the time limit? So the time limit is 2 years from the acquisition of second property. Okay. Then self-assessment for individuals. Election claim, pay days for income tax and class 4 NIC. First installment, 31st January in the tax year. Second installment, 31st January, 31st July following the end of tax year. And the balancing payment is 31st January following the end of tax year. Pay day for CGT, if not UK residential property, 31st January following the end of tax year. And payday for UK CGT on residential property, it's within 60 days of disposal. Then filing dates. If notice to file is issued by 31st January, sorry, 31st October, paper return, time limit, electronic return, time limit. If notice to file is issued after 31st October, 3 months from end of issue of the notice to file. Retention of records. Retention of records. Business records, personal records. Business records, it's 5 years from 31st January following the end of tax year. And 12 months from 31st January following the end of tax year. 31st January 32, 31st January 28. HMRC right of repair. So if HMRC figures out anything to amend, then it's 9 months from the date the return was filed. Taxpayer right to amend, 12 months from the end of, from 31st January following end of tax year. Error or mistake, like if taxpayer made any mistake, what's the time he or she can make the amendment? 5th April 30, HMRC can open an inquiry. HMRC can raise a discovery assessment. Taxpayer right of appeal against an assessment. So all these things. Moving forward, the next discussion is around inheritance tax. Inheritance tax, lifetime IHT on CLT. So we know that in lifetime only, CLT is the one on which we are supposed to pay tax. And on PET, there is no tax in life. Okay. So if the gift is made before 1st October in the tax year, following 30th April, if gift is on or after 1st October in the tax year, death IHT on lifetime gifts within 7 years of death, PET, CLT, and death estate 6 months after the end of the month of death. Deed of variation. Deed of variation is changing the will. So it should be 2 years from the date of death and it should be in writing. Transfer of unused nil rate band to spouse or civil partner. It is 2 years from the date of second death. Um, Election or claim. Now the discussion is on around corporation tax, replacement of business asset relief for companies, i.e. like rollover relief, 4 years from end of accounting period in which disposal occurred, replacement asset acquired, whichever is later. Set off of brought forward losses against total profits, income and gains, 2 years. Current year, 12 months carry back, 2 years. Surrender of brought forward losses to other group companies, group and consortium relief, 2 years. Election of transfer of capital gains or losses to another company, again 2 years. So if you look for corporation tax for every election, only replacement asset is 4 years, rest all of the stuff is 2 years. Then if I move forward, the self-assessment for companies, payday, like tax payment date for small and medium companies, it's 9 months and 1 day from the end of accounting period. Payday for large companies. If you recall, how do we define large companies? What's the definition of large companies? Do you recall what's the definition of large company?
With a trading income of more than 1.5 million and above.
Very good. So it's basically which income should be more than 1.5 million?
If it's a group of company, but if you have
So it's
more
to be
than one company in the group, you divide it by the group, then whatever the amount is, let's say for instance, you have 3-4 companies in a group, you divide the 1.5 by the total amount of company in the group, then whatever the amount you get, any trading income that is more than that will be regarded as a large company. I don't know if
So yeah, that is correct. But again, like I asked, which income to consider? So ideally, it is not ideally. In fact, to be precise, it is your augmented profits who decides your status. It's spot on, Moses. So exactly in the similar way for large companies, first installment, second installment, third installment, balancing installment with respect to start of the accounting period. Filing dates, later of 12 months or 3 months from the date issue, company's error or mistake, 4 years. So that was same in individuals. HMRC can open an inquiry, same as individuals. Retention of records, 6 years. Last not the least, uh, value added tax, compulsory registration, uh, historic test, notify HMRC from when we should start charging the VAT to the customer, future test, what's the due date to notify HMRC, from what date we are supposed to charge VAT to the customers. Compulsory registration, compulsory deregistration. Uh, what's the maximum time limit for the compulsorily deregister for VAT, and filing date of VAT return and payment of VAT. Both things are done on the same basis. And what's the due date? End of the following, the return period. So it's 1 month and 7 days to be precise. Okay, so I take a pause. Is there anything in particular which anyone of you want to ask, discuss, talk about? If no, then I like to close this and move towards the question.
Yes,
Yeah, I
yes.
will take time to go through this to it's just that it's quite much. Uh, I'll take time to say to go through it so that to ensure that if maybe during the exam any question comes from this part, we should be able to
So
answer
one
it.
thing I can tell you, like this particular page or PDF, I would not say this covers, let's say 100% of the questions, sorry, 100% of the dates, but yes, I can tell you that it covers somewhat 75 or 80, 85% of the dates in total. Okay, so we are here, two papers, so I prefer that we attempt the past papers, and the rest of the papers, I leave it with you guys to attempt at your own. So let's start with, let's say, first the June 2025 exam. Okay. Are we ready to start June 25?
Yes, go ahead.
So, shit. Okay. Then, 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 so let's start with the question. So I wondered that we would not be able to do, let's say, all of the three questions today. but we'll try to cover as much as we can. Okay. Go ahead. You should assume that today's date is 1st August 2025. So today's date is 1st August 25. You are an ACCA accountant and working for a firm of, sorry, you are an ACCA student and working for a firm of accountants. Your manager has asked you to carry out some work in respect of two prospective clients, Joel and her husband, Tyrell. In addition to some ethical considerations, so it means ethical considerations are already there. We are just talking about something more than that, okay? Which have been raised by your manager. Advice is required in respect of determining an individual's residence status, chargeable gains realized by a taxpayer whilst overseas, the calculation and subsequent taxation of employment benefits, company share option plan, participation in company share option plan, whether to voluntarily register for the purpose of VAT, and tax allowable trading expense. Okay. The following exhibits available on the left-hand side of the screen provides the information relevant to the question. Joel and Tyrell, memorandum from manager. Joel and Tyrell, chargeable gains and income. Letter from Joel. Tyrell, unincorporated business. Email from Tyrell. Work to be carried out. Email from the manager. This information should be used to answer question requirements within your chosen response options. So if you look, there are 4 exhibits, 1 requirement exhibit, response option, spreadsheet. Let's start with this. So, one of the interesting thing to manage over here is all of these exhibits along with the answers in one go, because maybe some data would be from first exhibit, some data would be from second exhibit, some data would be from third exhibit, and you need to keep the response option open. So that's one of the interesting art which you need to learn over here.
This is really challenging, to be frank with you.
So maybe what I would advise over here, Moses, is maybe you need to be more concentrated while reading the question. I understand it's very easy to say these type of stuff, but at times bit difficult to execute because we have the exam pressure, other things to take care of. Okay, so
Again,
let's start.
ACCs, they should be able to enable the platform or in such a way that you can copy and paste even in the Excel. At times, you cannot copy from the PDF document and paste in the Excel.
Yes.
It's really challenging. I think there should be a little bit kind of stability.
So I tried to copy this, for example, just memorandum records. And look,
No, to the
this memorandum.
spreadsheet.
So you're like, it's not pastable in a spreadsheet?
Yes. Ah,
Says.
okay.
So maybe if I try to paste over here, it's not. But if I go over
Okay.
here.
Okay. That's where the problem is. I tried to, in one of the exam, okay, this is a good one. This is a good one.
So Moses, my advice is to maybe at the moment what I'm feeling is you lack familiarity with this platform. I would say
Mm-hmm.
this. And how can we improve this? Maybe via attempting more questions on the platform. Because, today or yesterday I was on some discussion with my wife. I said her in a statement that computer is one of those things, the more you use it, the more you will get to know how much it is depth from inside or uh, what other options you can do. Well, coming back to the point, sorry. So, Moses, at least one thing I helped today. Extract from a memorandum from, no, not this one. So, the point one. Extract from a memorandum from your manager dated 1st August 25. This memorandum records the matters discussed in a conference call with Joel and Tyrell. They have been married for many years and in the process of becoming our clients. And in the process of becoming our clients. So again, nothing intentional, but while discussing the ethics, I was like, majority of the times, the examined issue is about new clients, right? And if you look, the question which we did on last Sunday, I'm forgetting, Lucia, again, the similar theme, new clients. Today, a random question, right? Similar theme, new clients. Just sharing. C and T had always been UK resident until on 1st July 23. Then they left the UK to go to traveling. They have been traveling overseas continually since that date, since 1st July 2023, and they are traveling overseas, right? They left the UK to go. On 1st November 25, they will return to the UK and become UK resident again. They will stay in the UK for the remainder of 25-26, such that they will spend 156 days in this tax year.
So they were temporary non-UK resident before. We can consider this.
Oh, yes, perfect. Very well said. So they were temporary non-UK resident. In the tax year 25-26, neither of them will have satisfied any of the UK ties prior to 1st November 25. Okay. So from in the tax year, okay, C. So that was something joint, right? C. On 1st November 25, C will commence employment with JDV Limited. JDV Limited is an existing client of our firm. Any issue with this?
Conflict of interest.
Very good. So conflict of interest we talked about, and it's possible where the employee and employer both are sorry, for both you are the similar advisor. So for both there is one single advisor, there is a possibility of conflict of interest. Okay, so I don't know the requirement, but at the moment I'm just guessing it. Okay, C and T do not own a house in the UK. From 1st November 25, they will either rent a property or live in a house which will be provided to C by JDV Limited. See the letter from C for information in respect of her asset sales in the tax year 25-26 and her employment contract with JDV Limited, Exhibit 2. Uh, T. On 1st December 25, T will begin trading as a sole trader. I have received an email from T setting out his plans in Exhibit 3. Let's look for Exhibit 2. Letter from C dated 1st August 25. 1st August 25. Okay. I set out below information you requested. Asset sales. On 1st October 24, I purchased two paintings, a portrait for 26,000 and a landscape for 24,000. I sold the portrait on 1st. Guys, everyone, keep a close eye on the dates because one thing, Hamza, you very rightly pointed that they were temporary non-resident, means they were out of UK. So if they were out of UK and there is some CGT related discussion, we need to be cautious when the assets were purchased, when the assets will be sold, what will be the CGT due date type of discussions.
Exactly.
So on 1st October 24, I purchased two paintings, a portrait and landscape for 24. I sold the portrait on 1st June 25 for 45,000. Until I recall, they were not back by that time. I could sell the landscape now, i.e. 1st August 25 for 39, or wait until 1st May 26 when I would expect to be able to sell it for 51,000 at a major auction in the UK. On 1st July 25, I sold a vintage car for 89,000. I purchased this car for 54,000 on 1st Feb 23 and we used it in our own travels. Employment contract with JDV Limited. My full-time employment contract with JDV Limited is for an initial period of 3 years on salary of 78,000 per year. This employment will be only my source of income. For the initial 3-year period of my employment contract, I can choose whether JDV Limited will provide either two cars, one for me and one for Tyrell, or the use of an unfurnished house. Either 2 cars or use of unfurnished house. The cars. JDV Limited has informed me that annual taxable employment benefits in respect of 2 cars would be my car, Tyrell car. If these cars are not provided to me by JDV, I will lease 2 cars privately at a total cost of 9,500 per year. Okay. The unfurnished house. Before I read, I can sense for unfurnished house in the similar way, either they will tell me what's the value of unfurnished house. And second thing would be like if I would have to take my own house on rent, X amount will be the rent, something like that. So now I'm start looking for it. The unfurnished house. JDV Limited purchased this house on 1st December 21 for 1.1 million, more than 75,000. JDV Limited had informed me that the house has an annual value of 10,000 and will have a market value of 1,480,000 on 1st November 25. JDV Limited would charge me a rent of 200 per month. So is it like reimbursement, right?
Yes.
If the house is not provided to me by JDV, I will rent a house on the open market at the cost of 14,000 per year. Okay. Now, referring to the above 2 bullets, like the unfurnished house 2 bullets, what do you guys understand?
The bullet are you referring to? The yellow or the green?
So at the moment, the green ones top 2 on the screen.
I'm understanding is that the house was purchased on the 2021 and the market the value is 1.1 million and
Expensive accommodation benefit. So
it's
Very good. So good, Qunber.
additional expenses benefits
Great. Very good. On which value? 1.1 or 1.48 million?
when it was provided to the
So it was mentioned she just joined. So let me open up the exhibit one. Let me point out this thing
have
for
to
you.
check the date when it was issued to.
so on that date the house was provided 1st November 2025, right?
Yeah.
So we can take the cost instead of market value when calculating the expensive accommodation benefit, right?
Don't mind you asking me, you telling. So I'm
Okay,
asking at the
I
moment.
will go with the market value since it's 4 years after the building was purchased.
If more than 6 years, then we have to use the market value, right?
Okay, more than 60. Okay.
Yes. So that's correct, Hamza. So Moses, that was like the 6-year rule. If the cost is more than 6 years old, then you have to take up the cost. But if cost is less than 6 years old when provided to employee, then you have to take up the market value. Okay. So since here cost is less than 6 years old, hence we are taking up the cost. We will take up the cost. Okay. Third, on 1st May 26, I will become a member of JDV Limited Tax Advantaged Company Share Option Plan, CSOP. I will be granted an option to purchase 1,400 ordinary shares a holding of less than 1% of the company at the current market value of 17 per share. I will exercise my options on 1st June 29.
Okay. It
I
meets the
believe,
condition of exercising in between 3 to 10 years.
very good. So it's like 1st May 26, 27, 28, 29. So we are like talking about after 3 years, right?
Hmm.
I will exercise my option on 1st June 29. I believe that a sale of the share on the same day will not give rise to a chargeable gain.
It will give rise to the chargeable gains.
Yes, and by the way, there will be chargeable gain, but there will be no employment income to it because it's a approved share option plan.
Hmm.
Okay, and sir, so
Mhm.
coming with this kind of comment is sorry, this professional mark, you will get it at this point, correct? Skepticism.
So yeah, so these type of discussions must be there, and maybe you need to comment on these type of lines to secure the professional marks. So
Okay.
professional marks, like we discussed on last Sunday, it's not you are not supposed to do anything very different or difficult to get them, but it's just you need to be cautious, or you just need. So at times, what we are thinking normally while attempting the question, professional marks are majorly to document them. That's the way I see it. Okay. Now, exhibit 3.
Can I ask one question?
Mhm.
Uh, in question, when I'm solving the kit, if it is mentioned in the question that explain with the calculation, so I'm getting confused. Do we have to perform calculation on the Excel and explanation on the Word, or we have to do both on the Word? Because
Yeah, yes.
some complex calculation required working in the Excel,
Yes, sir.
So,
Also, I also sent the same question to you. I think is
or
it
we,
2 days ago?
or
When,
we can do this like we are solving the workings on Excel, and then we can refer it in Word while explaining the tax treatment.
perfect. So thank you for raising this, Hamza. So to simplify, you need to make a judgmental call. How much is the proportion of calculations, and how much is the proportion of verbatim or the explanation? If you feel like explanation are, let's say, just putting up 1 or 2 lines,
Hmm.
then you can still keep it in Excel. Like majority, I'm just saying, that's not hard and fast rule which I'm going to refer, but just a high level, maybe a rule of thumb.
Okay.
If
Hmm.
let's say 10 marks and you believe that 1 mark is for explanation, 9 marks is for calculation, then you can put all of the stuff in the spreadsheet. Okay. If you
Okay.
believe, let's say, um, half of the mark, so 10 marks total, explain with the help of calculation, and you believe that calculations are like uh, only 2 to 3 marks, very tiny, toony, a high level multiply divide type of stuff, then you can use your own calculator rather than even referring to the spreadsheet, and you can put all of the calculations in the Word as well. But where you feel like it's between, let's say, 3 to 4 marks, or 3 to 6, 7, 8 marks of calculation, 2, 3, 4 marks of discussions, then in such situations, I advise you to use both, like the Word and the spreadsheet both, rather than restricting yourself to any one area.
All right.
so, but to me, if I decide whenever any question says explain with supporting calculation, to me it will be faster because of time challenge to just do everything in Excel. Because, for instance, the calculation, if you are doing it on the Word, you have to be punching your calculator, taking lifting up the figure from the calculator and putting it in the Word and all of that. This can take time. But if I'm doing it on the Excel, it will be very faster. What of if I decide to do all the pure calculation on the spreadsheet, and where they say explain with supporting calculation, I decide to do it on this on the spreadsheet as well. Why explanation? I do it on the Word. Now, in the case of explaining with supporting calculation, what if I decide to do everything on the spreadsheet? Will I be penalized? Am I going to lose mark?
No. So again, that's basically not you are going to lose marks. It's basically the important thing is what's the more appropriate way to present. You might lose marks for communication, but other than that, which is let's say up to 2.5 marks, but apart from the communication, you will not lose any marks unless you are providing or you are explaining or calculating the exact thing which is being asked in the question. Okay. Extract from an email from Tyrell dated 1st August 25. As you know, I will begin trading as a sole trader on 1st December 25. I set out below the information you requested. VAT registration. My maximum turnover is budgeted to be 60,000 and I will prepare accounts to 31st March each year. I will have some non-business customers, but most of my sales will be to small businesses. You have already informed me that all of my sales will be standard rated for the purpose of VAT. You should perhaps also be aware that I expect to purchase equipment and to incur other costs during November 25. Okay. Calculation of tax adjusted trading profit, product design. I first designed the product which I'm about to start manufacturing in September 19, nearly 5 years ago. At that time, I paid a fees of 5,500 to a design company to draw up the plans, but I did not go ahead with the production. Business promotion. In December 25, I will travel to train to visit 6 potential retail customers in the UK. I will explain my product to them, take them out for lunch, and give each of them a high quality chef's knife which carries a large engraving of my business logo on the blade. I estimate the total cost of this promotional will be 1,800. So, quick maths while reading the question. 1,800 promotional gift with the logo to how many customers? 6 customers. So 1,800 divided by 6, that somewhat turns out to be 300. 300 gift per customer. Is it something allowed?
Up to 50 was allowed, right?
Correct. So up to 50 was allowed. And if exceed,
Whole taxable.
all
Okay.
taxes. It's
Okay, it's only 50 that is allowed.
sorry, I
I
missed.
missed that point Mohammed made. You say it's
So
only up to 50 that is allowable. 50 pounds.
yes.
If
Yeah,
exceed
55,
whole become taxable if exceed 50.
Okay, if it exceeds 50, are we going to deduct 50 and tax the remaining, or everything will be
No,
taxed?
no, no.
Okay.
So Moses, if that's the case, then our statement would be access would be taxable. So you are talking about taxes. So let's say if 75, and if I take up this example, 300 is the amount, right? Per customer. So what amount will be taxable? Whole 300 or 300 minus 50, i.e. 250 will be taxable. What will be taxable? So over here in this situation, what we are talking about, whole 300 will be taxable. Okay. I would particularly like to discuss two matters: registration for the purpose of VAT and tax deductions available in respect of the cost of designing the product and promoting the business. By the way, any feedback on product design? Any feedback on product design?
Uh, is it pertaining to research and development?
Are we
Mm,
talking about company?
no. Right, right.
Research and development is dedicated to companies.
Exactly,
So here we
exactly.
are talking about sole trader. So again, coming back, product design.
That's a new thing, maybe.
It's not new, honestly. Maybe uh, if I correlate it with the concept, then it would not be. At the moment, maybe it looks to you. So product design, the way I see it, is basically pre-trading expenditure, the expenditure which you incur before start of your business, right?
Right, right.
And for pre-trading expenses, there was a time limit for trading, manufacturing business, for service business. If old till X number of years, then it is allowed. Otherwise, it is not. Uh, can someone tell what was the limit?
Can you come again? I couldn't get that part. I didn't get the point on the product design.
Okay. So I'm reading the product design paragraph again for you. I first designed the product which I'm about to start manufacturing in September 19, nearly 5 years ago. At that time, I paid a fees of 5,500 to a design company to draw up the plans, but I did not go ahead with the production. Okay. So my question is, and in fact, not my question, Tyrell question is, I would particularly like to discuss two matters: registration for the purpose of VAT and the tax deductions available in respect of the cost of designing the product and promoting the business. So this is one of the things which he wants to discuss with you. Now, what will be your instance with respect to discussion? Is it allowed? Is it not allowed?
It's allowed.
It's allowed. That's like your decision. So if you ask me, we need to see if he is trading manufacturing business, which apparently looks to be the case, then pre-trading expenses up to 7 years are allowed. And if it is a service business, then pre-trading expenses up to 3 years are allowed. So if it's service business, then this would not be allowed because I can see this is somewhat 5 years ago. But if it is trading manufacturing business, then it will be allowed because up till 7 years of expenses are allowed. Okay. So
Okay.
this
I think
is so this is all of the opinions. Now let's look into the exact requirement. So what is the exact requirement? So I hope you guys understand, let's say from our some of the questions which we attempted, that Exhibit 4 is the main requirement element. If I click on this requirement, so I click this one requirement, It simply says you should assume that today's date is 1st August 25. Respond to the instructions in the email from your manager, which is like Exhibit 4. Professional marks will be awarded for the demonstration of skills in communication, analysis, evaluation, skepticism, and commercial acumen. Extract from an email from your manager dated 1st August 25. Please carry out the following work. C and T will attend meetings with us together and will each have access to all of the advice we provide. Consequently, I can confirm that there is no need for you to consider any possible confidentiality issue with them. So he's like, no need to talk about confidentiality. Send me an email setting out the following. The behavior required for ACCA members in order to comply with the fundamental principles of objectivity and confidentiality. So maybe we need to discuss about confidentiality and objectivity.
But is this not, is there, this look like a conflict? He said, I can confirm that there's no need for you to consider any possible confidentiality issue between them. Then here he's saying that send me an email stating that the following the behavior required of ACCA members in order to comply with the fundamental principle of objectivity and confidentiality.
Yeah, and second, in relation to becoming tax advisor, to see any potential threats, to the fundamental principles of objectivity and confidentiality, and the safeguards which we should put which we should put in place. So on your question, here we need to talk about objectivity and confidentiality and the safeguards which should be there. Then C, tax affairs, personal tax affairs. Prepare notes to be used in preparation for a meeting with C, which addresses the following issues. Tax residence. I can confirm that C does not satisfy any of the automatic non-UK residence test. Or the automatic UK residence test in relation to her only home being in the UK. With that in mind, explain why she will become UK tax resident on 1st November 2025. So, sweet and simple ask, we need to discuss her residency status, right? Second, chargeable gains. While carrying out this work, you should ignore the possibility of C gains being subject to overseas taxation. Explain whether or not the gains made by C on the sale of portrait painting and the vintage car will be subject to UK capital gains tax? First question. Then explain with supporting calculations whether C should sell the landscape painting now for 39 or should wait until 1st May 26 when she will be living in the UK and will be able to sell it for 51,000. You should assume that C wishes to maximize her post-tax proceeds and that she will be a basic rate taxpayer in the 25-26 and a high rate taxpayer in 26-27. Okay. And by the way, I missed to point out one thing. The verb is explain and explain with supporting calculation. So in both of the instances, we are mainly supposed to explain. Okay. Uh, Fine. Moving on to third. Employment contract. While carrying out this task, you should note that C annual income tax in respect of her salary is this, and you should ignore NICs. Okay. In order to assist C in deciding which of the two alternative benefits to choose, calculate the financial cost for C of each of the benefits for a complete tax year and conclude your findings. So calculate the financial cost for each benefit. Okay, so each benefit as in car versus home. On the assumption that acquisition of the company share option plan shares will not result in a tax liability and that value of share in JDV is increasing over time. Explain the extent to which C belief regarding the tax application of selling shares is correct. Uh, C, Tyrell new unincorporated business. Prepare a memorandum for Tyrell client file. Which addresses the following issues. One, registration for the purpose of VAT. While carrying out this task, you are not required to refer to the specific product design cost or the business promotion cost. You should note that Tyrell will not be accounting for VAT using the flat rate scheme. Explain why it would not be compulsorily for Tyrell to register for VAT, but he could choose to do so voluntarily. So why he is not subject to compulsory registration and why he can opt for voluntary. Explain the factors in relation to output tax and input tax, which will help Tyrell understand the financial advantage and or disadvantage of registering voluntarily. Tax allowable expense. I can confirm that the chef knives, which are to be given to potential customers, are not items which will be sold by Tyrell in his trade. With that in mind, explain whether or not the product design cost and business promotion cost will be allowable when calculating Tyrell tax adjusted trading profit. Okay. So, guys, one thing which I want to highlight over here is interesting and important. For part A, send me an email setting out the following. Means for part A, you are supposed to send an email to your manager. For part B, prepare notes to be used in preparation for meeting with C. So for part B, you are supposed to prepare meeting notes. For third part, prepare a memorandum for Tyrell client file. So three separate formats. That's the only thing which I want to highlight. Are you clear with the requirement? So before I start the answer, any requirement on which any of you are not clear? Yes, please. So any of the requirement on which any of you are not clear?
I'm good. I'm fine, sir.
Perfect. Hmm. Okay. So let me start each question one by one. Okay. Bold, italic, underline. Contents of email. Contents of email. So from tax senior to tax manager. Does email has subject? Always yes. In fact, these days, if you do not put subject on email, it asks you. There is no subject. Still, do you want to send? Subject can be becoming tax advisor to C. The behavior required for ACCA members in order to comply with the fundamental principles of objectivity and confidentiality.
Question, sir. Hello, sir.
Yes, yes, yes.
Is it okay? Okay, we don't need to put email at the top, right?
Yeah, thank you.
Okay.
Thank you. Fundamental principles. Objectivity. And second one is we need to talk about confidentiality. Objectivity. ACCA members should advise their clients by reference to what is
Hello.
best for their clients and should not be influenced by, for example, bias or any conflict of interest. Confidentiality. ACCA members should not disclose client information to third parties without client permission unless legally or professionally required to do so. Then, in relation to becoming tax advisors, to see any potential threats to fundamental principles and the safeguards which should place in. So I'll write threats and safeguards together. First is about objectivity. Objectivity. Providing advice to see providing advice to see in respect of her employment contract with JDV Limited would give rise to a conflict of interest because JDV Limited is a client of the firm. A course of action which is most beneficial for Joel advantageous for JDV Limited. This could threaten our ability to provide either or both of them with objective advice. Accordingly, if we wish to act for both Shoal and JDV Limited we should point out the potential conflict to them and obtain their permission. In addition, we should consider having separate teams responsible for each of after objectivity. Second was confidentiality. It is possible that information we hold in relation to CH could be inadvertently revealed to JDV Limited. So this is the potential threat we are talking about. Now, how to safeguard with this? So next point talks about safeguard. Again, we should consider having separate teams responsible for each of them. So this is basically my feedback on the threats and the independence. So if you look for the objectivity, in the first two bullets of objectivity, I highlighted the threats. And in the first two, I highlighted the threats, and in the last two, I highlighted the safeguards. In the similar way, for confidentiality, in the above two, I highlighted the potential issues. and then I highlighted the thread safeguard. So first I highlighted the thread and then I highlighted the safeguard. Okay. Mm. So is there any feedback around this? If no, then I like to the next question.
This is for the objectivity part. We have to talk about objectivity in both two places, so it's a little bit tricky, but that's clear anyway. Uh, the first one was just a general comment based on ACCA fundamental principles, while the second one referred to the case in the scenario. So that's fine anyway.
Hmm. Perfect. So let's move on to the next part. Okay. If I look into the next part is C, tax affairs, prepare notes to be used in preparation for a meeting with C. Bold, underline, italic. Then we are here making notes for a meeting. Now, if I look into the first line again, prepare notes to be used in preparation for a meeting with client. So it's basically to the client files. Client CHLOE. Subject personal tax affairs. Prepared by tax senior. Dated now. The line which I'm going to write now is optional. Uh, if we write, let's find Do not write, that's also fine. These notes are to be used in preparation for a meeting with Shod. First issue to talk about, tax residence. Tax residence. I can confirm that she does not satisfy any of the non-automatic residence test or the automatic residence test in relation to her uh, only home being in the UK. Okay. So in the text here, 2526, see she does not satisfy the automatic non-UK residence test. Any of the automatic UK residence test. Mhm. Sorry, maybe I need to reword. In the text here 2526, C does not satisfy automatic residence test of being in UK for more than 183 days. Right, so C does not satisfy the automatic residence test of being in UK for more than 183 days. So this test we are not meeting, right? However, she will be automatically UK tax resident as she will be working full-time in the UK for some days of tax year 25-26. The split year basis will be applicable as CH Joel was not UK tax resident in tax year 24-25, i.e. she was not resident in the previous year. And she will be resident from 1st November 2025 as this is the date when she acquired her only home in UK and started full-time work in UK. So my conclusion over here is till this date, she was not UK resident. Till this date means till the date of 1st November 25, she was not UK resident. And after 1st November 25, she will be UK resident. Hence, the split year rule will be applicable.
Can can you just talk a little on the split year basis?
So split year basis is basically says that you are not tax resident, but due to some reason, you become tax resident. So for example, if any of your condition met during the year, not throughout the year, and you will be called as resident from that date, not throughout the year. So in such situations, we have the concept of split year basis. So just for reference, split year basis is more emphasized in this Finance Act. So I would not say that it doesn't exist in the previous years. Yes, it exists, but not an emphasized area till last year. So, but from this year, it's emphasized area. And so that's why we are discussing. That's part of the lectures as well. Okay.
Okay.
The second discussion is around chargeable gains. When carrying out this work, you should ignore the possibility of C gains being subject to overseas. Explain whether or not the gains made by C explain whether or not the gains made by C on the sale of portrait and the vintage car will be subject to UK capital gains tax. Gains subject to UK capital gains tax. Let's take the liberty to use the abbreviation. Okay. Um, Generally, gains are subject to UK CGT, where an individual is either tax resident in the UK or only temporarily non-UK resident. In the tax year 25-26, the tax year 25-26, C was temporarily non-UK resident prior to becoming UK tax resident prior to become UK tax resident on 1st November 2025. This is because she was UK tax resident for at least 4 out of 7 tax years prior to the tax year of her departure from the UK, and she was non for less than 5 years. So first of all, I discussed about uh, you know the themes. Now I'll talk about the specific pointers, which is like requested. Um, Portrait painting. Portrait painting. Portrait painting. Despite portrait painting purchased on 1st October 24 and portrait painting she is disposing of on 1st June 25. Okay. And she was leaving the UK. She was leaving the UK on 1st July 23. It means painting. It means painting. Both paintings were purchased after leaving the UK. Okay. I repeat, both paintings were purchased after leaving the UK. And if we are talking about first painting to be disposed of on 1st June 25, then it means it is basically before coming back to UK. Hence, it will be exempt from uh, capital gains tax. On the landscape, if sold in 1st August 25, there will be no UK CGT. Landscape, if sold in May 26, it is like after coming back to UK, it will be subject to capital gains tax. Okay. So I'm exactly starting my answer on these lines. Despite C being temporarily non-UK tax resident or gain on sale of the painting will not be subject to UK CGT. This is because she purchased and sold it after portrait painting, vintage car. Vintage car. Cars are exempt from UK capital gains tax. Accordingly, the profit on the sale of vintage car will not be subject to UK capital gains tax, regardless of her residence status and purchase slash disposal date. After vintage cars, the third issue is about landscape painting. Landscape painting. So if I look into the explain with supporting calculations, whether C should sell the landscape painting now, i.e. 1st August 25 for 39,000, or should wait until 1st of May 26 when she will be living in the UK and will be able to sell it for 51,000. Okay. Landscape painting. So as we discussed, if disposed of on 1st August 25, it will be before coming back to UK, exempt from capital gains. 39,000 would be net of tax proceeds, right? But if disposed of on 1st May 26, it will be after coming back to UK. I need to calculate the net of tax proceeds amount. Right? The gain on the sale of landscape painting will not be subject to UK CGT if it is sold before C returns to the UK, i.e. First August 2025. This is because C purchased it after leaving the UK and disposed of this before coming back to UK. Accordingly, in this circumstance, C post-tax proceeds would be equal to disposal proceeds, i.e. 39,000. Now, the discussion on if sold on 1st May 26. If painting sold on 1st May 2026, the disposal would be after returning to the UK. In that situation, the gain would be subject to UK CGT at 24%. S she will be high rate taxpayer in the tax year 26-27. So on your question earlier, I can sense that there will be some calculations more than the simple one or two step addition, subtraction, or multiplication. So that's why I'm giving a reference of a spreadsheet. If it would be a tiny toony calculation, then I wouldn't have referred over there. Rather, if any simple addition, subtraction, I would have calculated it on the word format.
Okay.
Okay. So working one, landscape painting. If disposed on first May 26. Disposal proceeds, cost, and that's employment. Uh-oh. Second one, 24,000. Taxable gain. On this taxable gain, capital gains tax at the rate 24%. It is just for your reference. Just for reference. So it is 45240. 45240. Considering the post-tax proceeds, C should sell landscape painting after she has returned to the UK on is this part clear? So to be
Yes, it's
honest,
clear.
I found this part to be interesting. No?
Yeah, very interesting. Looking at that you've been on a different tax rate band in a different period.
Hmm.
And not only that, I was also thinking that the annual exemption could be an advantage if you decide to dispose it in a different taxi.
Yeah. So third is employment contract.
Okay, just a question.
Mm-hmm.
So when either the purchase or the disposal of the assets takes place when uh, the individual is a UK resident, it will be subjected to UK tax, correct?
Correct.
The only way it will not be subjected is when during the purchase and disposal is not a UK resident.
Both both the dates. So, and that's maybe my specific argument or conclusion over here. Like if purchase and disposal, both dates are not in the fiscal year. Sorry. If purchase and disposal dates are both when the person was abroad, not in UK, then it's completely exempt. Best example, you can refer the landscape. So if landscape purchased after leaving the UK, disposed of before coming back to UK, no UK CGT. But if purchased after leaving and disposing of coming back,
I can't hear you.
okay? Is somewhat 11 marks. When carrying out, you should note that C annual income tax liability in respect of her salary. Income tax liability in respect of her salary. So it looks to me that this 1,800 632 of tax is for her salary only. Like salary was somewhat 78,000, right? 78,000. And you should ignore any NIC in order to assess C. In order to assist C in deciding which of the two alternative benefits to choose. So option 1, she can choose the cars. Option 2, she can choose the option 1, she can choose the cars. Option 2, she can choose the accommodation. Right? So calculate the financial cost of each benefits for a complete tax year and conclude your findings. So it's more about calculate. Working 2, employment contract. Mm, Salary was 48,000, sorry, 78,000 under both the situations. Then car benefit, 10,400 plus 7,800. House benefit, I will
Can we check?
calculate.
Can we just make a reference to the 10,400 and 7,800 in the question? Where is it coming about?
So it is like examiner has calculated and provided.
Okay.
Otherwise, if there is any doubt in my, so if the statement is in my view, I am of the opinion, then I would have
Okay, it's
challenged
for okay, got it. It's for both
both
person.
cars,
Okay,
both
both car.
cars.
Okay. Okay.
So I'll calculate accommodation benefit and write it. Okay.
Okay.
Why it is 96? This is sometimes spreadsheet misbehaves. Then 37,700. What the hell is-
We are going to ignore the working of in the question, the tax liability.
No, I'll be considering this. So what you are supposed to do, you are basically supposed to calculate the additional tax liability, right? Over and above, like what's the tax due to these benefits, the car and the house. So since I can see that the salary is like 78,000 already, that's closer to 100,000. There can be possibly change of band, etc., etc. So that's why I am uh, now high rate taxpayer. So let me first talk about this one, 58,500, 40%. So that somewhat translates into 23,400. Sorry, maybe I missed one thing. I missed one thing. So that is its employment income, right? Less personal allowance, 12,570 taxable income. House benefits. So first need to calculate house benefits. Okay. Hmm. Annual value, 10,000. Additional accommodation benefit, 1.1 million minus 75,000 multiplied by official rate of interest. What is the official rate of interest? Tax tables will guide me. Two 2.25. and I'm supposed to calculate these for throughout the year. So I'm not month apportioning anything or thinking, okay, this is for X number of months or anything like that.
State this. I was thinking that the examiner, once he put his cursor on the figure, he will look at the working.
Sorry.
Okay, I can see you are stating the formula.
Oh, so
Format.
that's basically for you guys. Honestly, that's only for you guys. So from the examination
Okay.
perspective, you guys are not supposed to do that.
Okay.
Because examiner has your spreadsheet, he can look where the value is coming. But I can tell you, I cannot export this Excel or a spreadsheet. I will take the screenshot for other students, those who are not able to join today. So that's
Okay.
basically for them.
Okay.
Okay.
Yeah.
So it's
Got it.
perfect. So I'm like cost is less than 6 years old. That's why taking the expensive accommodation, that's why taking the cost into the expensive accommodation benefit or additional accommodation benefit. Okay. Oh, so if you look, my income is more than 100,000. If my income is more than 100,000, then my personal allowance would not be uh, my personal allowance would not be 12,570. So it would be 12,570. So this should be his personal allowance. One zero eight double six three. Be vigilant about brackets, please. So I got the taxable income. Now I'm started calculating the tax. 37,700 into 20%. So total income tax 2591229. Total income tax less tax on salary. What was the tax on salary? It was calculated and already given. I do recall. What was the amount of tax on salary? No, it's given in requirement part. 18632. So income tax calculate the financial cost for each benefit for a complete tax year and conclude on findings. So I conclude on finding as well. Like the accommodation is to be more expensive than motor cars, right? I need to conclude only. The financial cost the financial cost of the financial cost of each of the benefits for a complete tax year for Joel is 7280 in respect of car. And in respect of house, right? Now, on the assumption that acquisition of company share option plan shares will not result in any in the tax liability and value is increasing over time. Explain to the extent to which C belief regarding the tax implication of selling the shares is correct. Company share option plan CSOP. Maybe here we need to consider your skepticism, and I can tell you why. If I look into this, I'll exercise my options on 1st June. I believe that a sale of shares on the same day will not give rise to a chargeable gain. So here, your skepticism should be awaked. This statement is incorrect. And now why this is incorrect, I need to defend, I need to justify that. Base cost in the shares for the purposes of CGT will be the amount she paid for them. And how much he was going to pay? 1400 at current market value of 17 per share. 1400 into 17. 1400 multiplied by 17, 23,800. Together with any amount chargeable to income tax in respect of the acquisition of the in respect of the acquisition of the Next. The chargeable amount on acquisition will be nil because the exercise price to be paid by C will not be less than the market value of the shares when the option is granted. So in the the third para, I said like there will be no taxable benefit. Because why there is no taxable benefit? Why there is no taxable benefit? Because the shares are not issued at discount. Point number one. Point number two, they are approved shares. So that's why. Mm, Accordingly, when the shares are sold, C will realize a chargeable gain on the equal to the excess of sale proceeds over 23 available amount of annual exemption will be subject to CGT at 18%. %24, based on the assumption that BADR would not be available as less than 5% of the shares runs from so I hope this would also be pretty much clear, the discussion of share options.
Yes, sir.
Perfect. So let me head towards the next part of the requirement. Please prepare a memorandum for Tyrell client file. And we are again going to make a memorandum.
In this question, does it mean that the professional mark for communication skill is going to take more marks because I can see that the communications format is much in this question.
So I understand your question perfectly. That's very well spot on. It can be. Most probably it would be. Then uh, Again, the line which I'm going to write is, if you write, do not write, that's totally up to you. The memorandum summarizes two matters relating to title, incorporated business. One is about uh, registration for the purpose of VAT, and second one would be title will not be required to register for VAT because his taxable supplies will not exceed 90,000 in a 12-month period. Title can register voluntarily because he will be making taxable supplies. So first I explain compulsory registered and if he can choose the voluntary, why he can choose the voluntary, right? Now, factors of registering. Explain the factors in relation to understand of registering voluntarily. Once title has registered for VAT, he would be able to recover all of his input tax because all of his because all of the supplies of his business will be standard rated. He would also be able to recover input tax incurred in respect of goods purchased for business purposes in the 4 years prior to registration, provided he still owns the relevant items and services purchased within 6 months. Tyrell has to charge 20% VAT on all of his sales. Tyrell customers non-business customers registered for VAT would not be able to recover this VAT. If Tyrell is unable to pass on to his customers the price increase resulting from charging the VAT the profitability of his business is likely to be reduced. So I hope you understand last point. Like if you are not able to pass on the prices, then it will be effectively borne by the business. Next discussion is around tax allowable expense. This is the first exhibit 3. Costs are allowed for tax purposes where they are incurred wholly and where they are incurred wholly and sorry, uh, where they are incurred wholly and exclusively for the tax purposes. Sorry, for the purpose of the trade and are not specifically disallowed. Then there were two items I do recall: product design and business promotion. The design costs are allowable for tax purposes because they were incurred by title within 7 years prior to commencing the trade and would have been an allowable expense if they had been incurred after he began trading. The cost will be treated as having been incurred on 1st December 2025, the first day of trading. Product design, I'm done with the discussion. Uh, Cost of promoting business promotion. The travel cost will be allowable the travel cost will be allowable for tax purposes in accordance with the above principles. The cost of buying lunch for prospective customers will be classified as entertaining customers. It is not allowed for tax purposes. The proposed gifts carry advertisement of tile business and not consist of food, drink, etc. Accordingly, the cost of gifts will be allowable purpose provided each one cost no more than 50 pounds. If total cost of knife of 1800 is for 6 customers, then cost is more than so I'm done. Uh, your feedback. So I am done. I hope you can hear. You there?
Hello.
Yes, man. Yes.
Hello.
Yes, yes, you are audible.
Can you hear me?
Yes, yes, I can hear you.
Okay, sorry. Yeah, I'm fine. The question is straightforward, but a little bit tricky. I was mixing up the VAT purchase prior to VAT registration for the service
Hmm.
before VAT registration is 6 months, while the product purchase that are still with the customer, with the supplier Is 4 years correct?
No, man. So 4 years is for VAT,
Yeah,
for
yes, for
income.
what?
Oh yeah, 4 years for VAT, and that's why I mentioned 4 years for VAT in the financial advantages of discussing the VAT.
Okay, what about the pre-incorporation expenses?
So for okay, so two things. One is the trading aspect that is separate, and one is uh, VAT aspect that is separate. So if you
Okay.
ask me about VAT aspect, so my answer is for pre-registration expenses, it is allowed for it is allowed for 4 years for goods and up to 6 months for services. So which I
Okay.
covered in 3.1 in requirement 3.1. Okay. Whereas if you ask me about pre-trading expenses, like the before start of business expenses, then that requirement is something else. Then
Yeah,
that
okay.
requirement is, to be precise, that it should be for trading manufacturing business, it should be up to 7 years. And for service business, up to 3 years of expenses are allowed.
Okay. Okay, that's clear.
So thank you very much, Moses, for being with me. Otherwise, I would have board
Yeah.
ignored.
Thank you.
So
Thank you so much too.
you're most welcome. So I'll upload this question to the PDF for you guys. Do have a look, and if any issue, please reach out. Okay.
Okay. All right. Thank you. Have a wonderful
Thank
night.
you. Same to you, man. Take care. Good night.